Today I'm going to talk about the stock that I bought last week, which was a stock called Gang. I've owned this stock for over a year now, and yeah, last week I bought some more shares in it. I do get the classic thing where I have not talked about Gang for probably 4 weeks, in just maybe over a month, and I got the people in the comments saying, oh, I've given up on Gang because I've never talked about it, or I've sold out at a loss, which isn't true. I'm happy with the company. It's performed absolutely amazing, and to them sort of people that have been saying that, I dedicate this video to you. Gang, in my opinion, is a fantastic company, and even though the share price hasn't performed that well since I've owned the stock in the last just probably over 12 months, even though the share price hasn't done well, and like a lot of stocks, like a lot of small market cap stocks, like a lot of growth stocks, it's just gone and fallen down on the share price. The big thing with this company is I look inside the company, I look at what the company's doing, what the company's producing financial wise, the deals they're making, and if anything in the last 12 months, even though it's a little bit annoying that the share price has gone lower and lower, everything in the company in the last 12 months has just improved, and even in the longer term picture, the picture is just getting better and better. And with a combination of the company absolutely smashing it and the share price going lower, I've now gone from the point of view where I was buying this stock and thinking, yeah, you know what, in the next 2 to 5 years, I can probably double my money in it, to now that the company's performing even better than what I thought they would, and the share price going even lower, I'm now looking at this stock going, you know what, this is one of those stocks that you look at and go, 3x, 5x maybe, 10x maybe. Now I'm seeing so much upside on this company, and like I said, for me, and it is a little bit frustrating in the short term to see that share price go lower and lower, but that does mean as a long-term investor, someone that's tracking this company for the next few years, that I do look at the share price dropping and thinking, I've got a lot of upside in this one now. So yeah, I'm going to get on to Gang and why I bought this company last week, and why I will continue to buy this stock, and why I think it has a lot of upside. So we'll take a look. Now, if you do want to know when I'm buying and selling companies in real time, make sure you join the Patreon. Link is in the description. I also post 2 exclusive videos a week on there that are not on the YouTube, and there's also a Discord with 600 members on to talk about stocks as well, and it is the highest subscriber to Patreon on the YouTube scene, which I'm absolutely proud of, and yeah, I think it's pretty good for £5 a month anyway. But getting on to Gang, obviously, like I said, you know, when you look at the stock chart, to think this stock actually IPO'd at like $14 over a year and a half ago, you know, and at that point after the IPO up to $27, and even in February time it was $30, and now we're all the way down at $6 is crazy. And 291 million as well. Like, when we start talking about the revenue numbers in a little bit, this company to be valued at 291 million is crazy, and there'll be a few reasons actually, not just the growth side of it, but investments that they made as well, which will point how crazy this is. Now, if you don't know what Gang does, it is capitalizing on the growth of online sports wagering. So if you don't know, I cover this so much between Gang and DraftKings. Basically, sports betting, gambling online has only just started coming to the US, and more states, as you can see here, are starting to open up to this, and more than likely within the next few years we'll see more and more states start opening up because they could benefit from the taxes, and especially with them having to recoup with what's gone on in the last few years as well, that's probably only going to help things. But as more and more states come online, obviously this means that there's going to be a massive growth area here as people do start doing online wagering, and Gang is a platform that helps with this. Basically, they've got 2 income streams. They have, first of all, the B2B side of it. So what they do is they're basically, the best way to explain it is like Shopify. So Shopify, I think most people watching this will probably know what it is. If you don't, I'm really sorry, because this is the explanation I'm going with. But Shopify basically lets a lot of businesses create an online shop and then sell online. Gang is basically the same, but obviously not with a shop, it's sports betting. So let's say someone like Penn National wants to go online on sports betting. They use Gang software, and that lets them go online and do all the sports betting online. And it's a very successful platform. It's one of the best platforms out there for that. So they partner up with a lot of these businesses or casinos, which they've landed so many in the last few years, and they help them get online, and that's going to be the massive growth in the next few years. So this B2B side is going to be a big part of the business in the next few years, and some customer launches that they've made through the years, as you can see, go through here, and 2020, once again, massive amount of launches, and in 2021 a good amount of launches as well. Not that it reflects anything on the share price, but they have landed massive partners and launched them in more and more through the year has gone on. And the other part of the business is Coolbet. They do a B2C, so they actually do the sports betting side of it, and they do this through an acquisition they made last year, and yeah, Coolbet was more like Latin America, a bit of Europe as well, and they've started to now expand that. They're starting to expand the countries they're in, and this has been a really good purchase. So they bought this company in the 5th of January 2021. They bought it for 175 million, and since then the growth of this company has been absolutely amazing. And this is a big thing, you know, a gang paid 175 million for this, and it wasn't a, you know, it was a decent price. It was okay what they paid for it, and this is what I mean. You know, this is the Coolbet they bought for 175 million over a year ago, and if we just look at what the company is valued at right now, like 291 million, which is crazy. So yeah. But this Coolbet has been a great acquisition for the company and has really helped the growth as well over the last 12 months. Now, the long-term growth on this company is exciting. It has, we're going to talk about the balance sheet in a little bit, but they are looking to get 30 to 35% adjusted EBITDA margins at scale. So this is a little bit longer term out, but believe it or not, this company actually used to be profitable. The last few years it hasn't been profitable as it's been launching a lot of those big clients, and what will happen soon is it will actually start getting back to doing profitability. So this company has a history of doing profit and will get to profit very, very soon as well, which is really good. So you won't have to worry about cash burn. And the thing is as well, this sort of model here will put probably decent margins in for the company as well. So yeah, it's a company, a high growth company that is very much near profit, has done profit and will do profit going forward. And long-term vision of this company is also very good. So this is one of the targets they have, is that in 2023, the revenue is expected to be around 225 million to 250 million. And that will be a 3-year CAGR basis of 35%. So if we just go back to this company here, back to the actual valuation. So 2023, 225 million to 250 million. I mean, we're only about 2 years off that now, and that would be, you know, such a low price to sales ratio that this company would have. And you also start thinking about, well, in that kind of 225 million to 250 million, imagine if they'd kind of start putting, you know, 5% down to profit, or, you know, 10% down to profit. I mean, and the thing is, this is going to be at the rate of 35%. So you start thinking here that, well, if this company is valued at 290 million and it starts doing, you know, let's just say 10 million in profit, you know, this company is going to be trading down at a, you know, 30 times earnings. And this company as well is obviously going to be growing at a huge rate. You know, you're not really going to buy a company that's probably growing at like 35% if it's a 30 times earnings. So the growth is great on this company, and if they can hit the growth in the long term, that's going to be great. Obviously very much near profitability as well. So, you know, this company has it all. It has good growth rates, it's at a good valuation, it's getting valued at nearly a value stock for a growth company, which is crazy. And if they do these numbers, it'll be great going forward. Now, that's obviously talking about things going forward, but just this year, like I said, you know, you look at this company here, you look at the share price and you think this company's had an awful year, but this company's absolutely smashed it. This is the strange thing, and this is why I don't mind buying some more shares at these prices, because at the moment inside the company, it's all going really good. You know, this company here, you know, this was the best quarter so on the year of last year. Q1 grew 263% year over year. And if you look at this point of view here from Q1 at the start of 2021, they said they are increasing our full year revenue guidance to the range of 103 million to 108 million. Now, if you just fast forward to the last earnings, which is Q3, we've not had Q4 yet, which should be in the next kind of 2 or 3 weeks. But if we go for the last earnings here, same again, they grew 214% year over year. And they have now kept to the guidance that they're going to do of 125 million to 135 million. So look at this coming here, you know, they originally went 103 million to 108 million, and now they're doing 125 million to 135 million. I mean, that is some increase on the revenue. You know, that's not even close. That's a massive hike up in the revenue, and the growth they're putting in is crazy. Now, they probably won't grow this much going forward. You know, like I said, they're probably going to grow probably around about 35%, but I mean, come on, it's just absolutely amazing. And this is the thing, you know, like you look at the share price, and it is a little bit frustrating to see the share price at these prices, even though it's had such a good 2021. But, you know, never mind. You know, for me, I'll just kind of buy some more shares, and I think in the longer term, that will just give me more upside. Now, just from a bit of a valuation point of view, once again, you know, this is the crazy thing. Like, this is a fantastic growth company that's very close to profitability. And then what is the even more crazy thing is when you start looking at some of the historic metrics, for example. So if we look at total enterprise value to revenues here, you know, it's currently down on a forward basis of a 1.4. You know, if you look here, like at the 30th of June 2020, this was a 17. I mean, you start working out what this company share price would be. Let's just say we put that on, it shouldn't be down here. I mean, let's just say that we, put it down as a 5. And even that's, you could argue that's quite cheap for this company. But if we just went down on a 5 from here, that would be more respectable. And then you start thinking about, okay, what will it be in 2023, 2024, 2025? Price sales ratio, it's down at a 1. Previously 17, 10, 9, 7. On a EBITDA point of view, it's a 13 down here, and it was previously a 65. All these metrics stand out way too cheap. I don't think I've ever seen. Maybe the only other one that I would suggest that I have seen actually, maybe is currently Hims and Hers. Those are the only two companies that I've ever seen that have grown so much, had such a good financial year, and then you're down at a price sales ratio of 1. It's very unheard of. The price sales ratio of 1. You normally talk about companies that are growing, 4 or 5% a year, not they've just grown 200% and are going to grow 35% going forward. I mean, it's bonkers, and this is why originally I thought this company could 2x from here, but now because the company's doing so well going forward and now it's so low on the valuation, I'm looking at this one going, it just is generally, never mind like a 2x, 3x, 4x. I mean, you start getting in the ranges of potentially 5x's, and I don't like saying that because I feel like it's a bit hype and a bit, it's a bit, I don't know what the correct word is, a bit pumperish, I guess, a bit of a classic YouTube pump or something like that. But generally, like, you can see here for yourself, I'm not trying to make this up, I'm showing you past metrics, I'm showing you the growth, I'm showing you the future growth. Like, if a company hits these numbers, there's no way it should trade down at these valuations. So, that's my thoughts on it. Yeah, I know. Obviously, I'm probably a little bit biased, and there's a chance that I am wrong. But I just, I'm so, when people ask me how confident I am on it, I am 99% confident on it because there's just so many things going right for it. And obviously, financial health wise, it's very clean on the balance sheet. There's no debt. It's sitting on 50. What's the cash now? 50 million in cash, and it's 276 million. Even the company's buying back its own shares now for a growth company. Not normally something you see. And ownership wise as well, it's founder led, CEO led. I think Dermot's been there, I believe, since 2004. Don't take that concrete though. I've just tried to pull that number off the top of my head. But it has been there for a long time, and he's pretty much the founder, even though he doesn't say. And he is the CEO at the moment, and he does have a lot of skin in the game. He has 4% of the shares at the moment in the company. And obviously this company as well has been obviously was public on the US, public on the UK exchange before it moved across as well. So it has been quite a public company for a long time as well, and he's still been there, and he's still kept decent ownership. So yeah, I do like that factor as well, and I do think he's quite a good CEO. So just thought I'd do that little update into Gang. It's just saying that I'm still bullish as ever. I think the story is only getting stronger, and now the prices, it's just dropping. The valuation's lower than it's ever been, really. I'm just happy to pick up shares, and even though it does kind of sting a little bit that it's down so much and it's just been caught up in this cycle of growth stock selling off, my confidence is still there, and I still believe in long term this will be still a very good investment, and I think I'll still make money on it. In fact, I think I'll make even more money on it than what I would do a year ago. So yeah, I'm happy to hold this, and I thought yesterday was a good time to buy some. Not yesterday, last week was some good time to buy a few more shares, and also do a little bit of an update on it. So I've not talked about it for a couple of weeks, so hopefully that's good, and maybe we'll make a video after earnings, so we'll see what happens. But yeah, hope you enjoyed it. If you could hit the like button if you're new, subscribe, and I'll see you next video.